Welcome to the Value Investor by TipRanks. My name is Tom Nash, and today I'm going to clean up this mess that is Palantir. There's so much being said, so much being written. There's this cacophonic mess around this company. It's really impossible to get an objective analysis of everything that's good, bad, and ugly about this company. And today we're going to do just that. We're not going to fanboy, we're not going to hate. We're just going to give you exactly what went on in the Q4 results and why this stock dropped 15% yesterday, because a lot of people are confused. Are you confused? Am I confused? Who knows? But the one thing I can promise to you, we're going to have a good time and we're going to figure out what's going on with Palantir without any of the hype or the hate. Let's get started. So let's talk about what happened with Palantir yesterday. Obviously, they hit the revenue mark and some actually beat revenues with 432 million instead of the expected 418. Good job on that front. However, Palantir missed on the EPS. Only 2 cents per share instead of the expected 4 cents per share. So 50% miss. It's a big miss. What's next for the stock? Because I think it's fascinating. So let's talk about the why first. Well, obviously, we had some contributing factors that has nothing to do with Palantir that actually accelerated the demise of the stock yesterday. A lot of geopolitical tensions from Russia and Ukraine are basically popping on the surface again after we thought this was over. And the entire stock market felt the pain. Nvidia was down 7.5%. Snowflake was down 6%. So that should account for at least some of what happened with Palantir. But since Palantir was, as my good friend Justin said, the biggest loser of the day, that can't be 100% of what happened here. There had to be other contributing factors. And they were. Let me explain. So the thing with Palantir is that we had this 41% revenue growth, very impressive. We had this massive growth in the commercial sector. We have massive growth in the government sector. Government grew 47%, commercial growth 34%, $1.55 billion of revenues, $424 million in free cash flow from operations, no loans. So why is it dropping? Well, so when you buy a car, you have to look under the hood. A car that looks nice isn't enough. You have to see that everything under the hood actually is pristine. And in the case of Palantir, there's a little thing hiding under the hood we have to talk about. While the growth was spectacular and while they improved in every metric, they even actually reduced dilution, only 2.5% dilution in this quarter, actually reduced stock-based comp, growth was phenomenal. But what's hiding under the hood is the deceleration in the government growth. So as you remember, I said the government business grew 47% this year. And the commercial side grew 34% this year. But if you look closely at the numbers, you find out an alarming trend, which is that the government growth is actually decelerating while the commercial is accelerating. What I'm talking about? Well, if you look at the commercial growth, it had 19% growth in the first quarter, 28% growth in the second quarter, 37% growth in the third quarter, and 47% in the final quarter of the year. It's exponential. It's accelerating. But if you look at the government side of things, it's completely opposite. It's like a mirror image. 76% growth in government business in Q1, then 66% in the next quarter, then 34% in the quarter 3, and then Q4, 26%. So we went from 76% growth to 26% growth. And since still, to this day, the vast majority of Palantir's business is coming from the government still, it's an alarming trend. So that deceleration is what I think got a lot of people uptight. But before you go running for the hills, hold on, let me explain. This isn't as bad as it looks. I know that sentence has been used in some really nasty situations by certain husbands in certain apartments, but let me explain why this is honestly not as bad as it looks. So the thing is with Palantir, you have to understand that it is going through a change. It's actually pivoting away from the government side of things into the commercial side of things. And it makes sense because the total addressable market on the commercial side is unlimited, while the government side, it has a glass ceiling. There's only so many governmental agencies you can sell these products to, and Palantir understands that. They're not going to be a trillion-dollar company ever if they stay just a government contractor. They're going to have a nice business, but not anything beyond. They know if they want to hit that 1 trillion mark someday, in 10 years, 15 years, they have to go and cross that river into the commercial sector. So that's exactly what's going on. That transition is not being accepted nicely by Wall Street. man, it is what it is. For long-term investors, this is exactly what they expected, so they're not freaking out. But for retail investors in this company, it's a little bit scary, and I get it. And talking about retail investors, that's kind of the second part of why this company is behaving the way it's behaving, is because this company has a high percentage of retail investors, actually more than most of the big stocks in this market. 35% institutionals, 65% commercial retail investors, which means you have a lot of volatility. While companies like Nvidia or Snowflake, they have about 70% of institutionals who don't really get excited about EPS. In fact, they don't care about EPS, earnings per share. They look at the revenue growth, they look at the margins improvement, they look at what's going on with the company as far as the commercial growth. But retail investors tend to be a little bit more volatile, and that's why you're going to keep seeing this company basically swinging up and down like this every time you have a bit of good or bad news. It's pretty much, the maturing process of a stock moving away from retail into institutionals. And lately, there's been a lot of institutional buying. Companies like BlackRock and Goldman Sachs are pouring into this company, but not enough. Not as fast as we would like to see as Palantir investors. But eventually, when this happens, you're going to see much less volatility over things like EPS, because on Wall Street, EPS is just a vanity metric. As long as you can show me, if you don't have GAAP profitability, as long as you can show me as an institutional investor that you have growth and that your margins are improving, which Palantir actually meets both these conditions, I'm happy, because it shows me you're on the right track, the business is sustainable, and it's getting better. But, EPS is still there as a metric, and, it sent the stock down. The second part, which I think alarmed a lot of people, is the commercial sector. As you just saw, the growth is expediting quite significantly. The problem is that it's mainly US driven. While US grew 130% on the commercial side, the entire commercial side grew 34%. So that kind of tells you how much they have outside the US. Not a lot. So that lack of expansion, for whatever reason, maybe it's self-imposed, maybe not, actually is scaring a lot of people. Until they open up the European markets, it's going to be very hard for people to look at this as a global company that's taking over. It is killing it in the US, but until they open up the European markets and actually go there and create some business, it's going to lag. Now, speaking of new business, quite impressive in this quarter, and that's kind of like the good thing here. They closed 64 new deals worth $1 million or more just in this latest quarter. In fact, 19 of those deals were worth $10 million or more. Their client list is increasing, a 71% increase in the amount of clients they had this year. So still a company that's trading at 4 times cheaper on price to sales versus a company like a Snowflake, for example. It doesn't seem to be that expensive. And while people talk about lack of GAAP profitability, GAAP would be general accepted accounting principles, they just generated cash flow from operations of $424 million on $1.5 million of revenues, which I think is about 30%, not bad at all. You have to remember that stock-based comp and that kind of activity causes accounting losses, but not cash flow losses. So it's really important to differentiate. Now, while it is true that stock-based comp causes dilution, which dilutes some of the shareholders, it is true, but as far as profitability, the company is doing better than ever. Now, the thing I want to talk about here is what's going on right now with the numbers that are on the dilution side, because it concerns a lot of people. I know. So the company is actually slowing down dilution quite significantly. Stock-based compensation is declining, and dilution is also declining. In fact, in the last quarter of the year, the dilution was only 2.5%. From 1.96 billion to 2.01 billion, dilution seems to be slowing down to a screeching halt, which I think would make a lot of people happy, even though I guess the bull case here would be to explain to you that dilution, for the purposes of giving stock-based comp to retain high-profile employees and, potentially prepare for competition against a company like Microsoft in the future, for example, that would be a smart thing to do. But, Wall Street doesn't like it. The street doesn't like it. But at this point, it becomes an academic discussion since pretty much, it doesn't really happen anymore. They seem to have exhausted this. And now the real question begins is where this company is headed. At $12 per share, at 17 or 18 price to sales, the question is if this company is ripe for the picking or you should wait a little bit longer. Honestly, I don't know, and I can't give you financial advice here since I'm not a financial advisor. I can just tell you that in my personal opinion, if I look at this company and I see a few factors such as growth, I see improvement in margins, I see a moat, and I see some of the best clients, some of the stickiest business in the industry, I'm extremely optimistic about this company. But then again, nobody really knows. There's only two certainties in life. Number one, we're all going to die someday. Number two, we're all going to pay taxes. And anything beyond that is just unknown. Same for this company. Nobody really knows, but I personally think it's worth your research. I would urge you to spend a couple of hours reading the financials, reading about Palantir, try and figure out if this company fits your investment profile. But of course, talk to a professional, consult with professionals, and make sure you make the right decision for you. And as always, let us know below what you thought about the Q4 Palantir. Do you think they missed? Do you think they beat? What's going on with the stock price? Let us know below. We'll see you in the next video.